Morning, it's Vijay here. Welcome to yet another episode of Pre-Market Commentary. Today is Friday, 27th of June, 2025. So yesterday was a blockbuster day as far as the markets were concerned. Nifty took off, Bank Nifty made an all-time high, lot of euphoria all around and lot of also sadness because the bears were butchered, you could say. I have no sympathy for them because I think they overextended their arm because of bad news all around, and markets actually climb walls of worry. But what was interesting was the advanced decline numbers yesterday, and the declines were higher than advances through the day, excepting for the last few minutes, where the advances just edged over declines and came into positive territory. Now, that is the issue which a lot of people have, that the markets are up, okay, but my portfolio is down. So, what do I do? But this is not something which is new. Even our portfolio yesterday was in the negative as far as the MTM was concerned. But you cannot look at your portfolio on a day to day basis. Markets can do anything, the Nifty can do anything, the Bank Nifty can do, or the sectoral indices can go up and down significantly on any particular day. But what is important is what is our portfolio doing over a period of time. I will just give you an example here. Take this case. This is the Nifty daily chart somewhere from March to yesterday. So if you remember, in February the markets were coming down, people panicked, a lot of them sold out. In fact, large mutual funds like PPAFS started putting their money in cash, and they did not dare to invest. This was here. This is in February. Then in March, suddenly it shot up, and then a lot of people felt that they missed it and wished they had bought. And then again, it fell down in April for the Trump's tariffs. And then people said, "Oh my God, I was right. Who will buy this?" Because it had broken the previous low. So typically, technical analysts all gave sell signal here, and it was a day when huge volume had taken place, which meant some smart buyers were buying below the technical sell signal. So the entire market was on one side, and the smart gap buyers were on the other side. And immediately the day it recovered, and then it just went on and on. And now what has happened yesterday? Everybody is saying WTF happened. So now the question here is, what are you going to do here? That is in February end. Or are you going to be like the large mutual funds? And there was an executive director, well-known, legendary executive director of a large mutual fund, who said sell out everything in February. He was right for about 10 days, but then see what has happened. He was somewhere here. He said that, so he would have been feeling nice. A lot of people felt nice that the legendary fund manager has said, and a lot of people. I had made a special video on that. The top mutual fund managers and the so-called legends were all very, very bearish here, and they were right for a few days, and then it bounced back. They again felt doubly right here, and a lot of people followed them, and this is what has happened. So the trick here is to not worry about what the market or your portfolio does over a period of time of say 1 week or 10 days, but look at it for a little longer time. Clearly, we are in a bull market. Now there is not much the bears can argue. But still, as I said, people will say, "Oh, markets went up yesterday, but your portfolio came down. So the market is going to be bearish." So I think we should separate, as they say, the grain from the chaff, and then look at our portfolios in a slightly longer time frame. We look at our portfolios on a 3 month basis, though we buy it for an 18-month basis, but every 3 months we'll review as to whether we are on the right track, apart from reviewing it daily. But I'm saying is hard review, we take it every 3 months. So yesterday, Nifty closed about 25,500, which ended at a nearly 9-month high. Only 7 times before in history has Nifty closed higher than what it closed yesterday. Heavyweights, Reliance and HDFC Bank were the biggest Nifty contributors. I had mentioned that Reliance is looking very interesting. After a long time, it is showing strength. And if Reliance shows strength, Nifty cannot show weakness. And HDFC Bank also is showing strength. Both of these contribute nearly about 25% of the index. Nifty Bank closed at a record high. ICICI Bank, which was generally weak, bounced back. HDFC Bank was the top contributor. So nearly 40 Nifty stocks closed higher, with financials and metals being top gainers. Hindustan Copper did very well. We own Hindustan Copper. We believe copper is the new gold. So therefore, a pessimist will look and say 10 out of Nifty stocks closed lower on a day when everything is going up. So it's a divergence, a negative divergence. So you should not be bullish. But people forget that 80% of the stocks closed in positive. Sensex rose 1,000 points. Nifty Bank gained about 586 points, and mid cap index gained about 346 points. Four Nifty stocks made an all-time high: Bharti, HDFC Bank, HDFC Life, and Grasim. So that is very important to note. All these are big stocks, high-weighted stocks, and stocks which are in different segments of the economy. Market breadth, as I said, was neutral. Bharti Airtel and HDFC Bank crossed 2,000 rupees for the first time. Dr. Reddy ended lower because of a negative brokerage note. And I mentioned Hindustan Copper surged nearly 5%. There is a shortage of copper in the LME, that is a London Metal Exchange. So there is a squeeze going on. So I expect copper to go further. Okay, with all this euphoria, where are we on PE ratio? Nifty PE ratio is 23. The Nifty PEG ratio, which I look at more intently, is only 1.73. If Nifty median PEG ratio goes to 3, then I will get worried. So there is still some distance to go. Typically, Nifty PE has topped out around 28 in the past on a standalone basis. Even on a consolidated basis, it has topped out at 28 in October 2021. Last time it topped out was at 24.5. We are still not there. Bank P ratio is about 15. The Nifty Bank Nifty P median PEG ratio is at 0.38. Still some distance to go as far as the financials are concerned. FIS, I don't know what they bought yesterday. 12,600 crores. Probably they bought the bank titans, which are like HDFC Bank, ICICI Bank, and Reliance, and that is why the numbers are enormous. But I don't pay too much attention to FI and DI numbers on the last day because there are a lot of arbitrage numbers which come into play. Nevertheless, what it shows is that FI interest is still there. How did the global equities perform? S&P hit a new high. Dow Jones did very well. Nasdaq also 1% almost, both of them. FTSE was flat, CAC was slightly down, and DAX was the only strong stock market in the European sector. Oil is steady at 66.74. Gold is steady at 33.20. Silver is strong by 1%. Copper is close to 2% high. As I'm mentioning, copper is going to be the focus for the next few weeks. So how did we perform over the week? We performed 1.74%. We went up. 1 month, it was a 3.22% gain on the Nifty. And on a 3-month basis, it was 8.63. Year to date, from January till yesterday, it is about 6.6% gain on the Nifty. Of course, there are other indices like the best performing was 4.68% of Nikkei last week, followed by Nasdaq of 3.8%. S&P and Dow Jones also did significantly well, closing up to 3%. So if on a 3-month basis, S&P Nasdaq is the best performing at 16%, and S&P is our best for second with 10%. So there is this interesting analysis by CNBC. So how did the last few July series? So today is the beginning of the July series. We have had 4 consecutive months of good, of positive closing. So generally, we have never closed 4 months and above positive. So that is a tricky July. July is also a time when the results come. So you will see some sort of volatility here. So that is what I think we should be prepared for. We cannot expect a smooth round, but surely and steadily we can hold on to good stocks and buy the decline. And what I would say is, you need to rotate among your portfolio, as like this, what this broker says. I suggest a portfolio of 50% greed and 50% fear. What it actually means is 50% greed is momentum. So your portfolio, I mean, I'm not a SEBI registered advisor, but a momentum portfolio of 50% of the stocks and a 50% of, safe stocks, or what we call blue chips, should take us through to do well in the next few months. I'm very bullish. I continue to be bullish. we will continue to buy on decline. Yesterday also we did that. It was a good day for us. So whatever you do today, I hope it is successful. Thank you.